So welcome everybody to September's Tech Talk. And we've got Dylan Burgess from Float. Is it Float or Float app? What's the Float?
It's Float. The only reason we have Float app is because Float, actually there was two Floats that both started in Edinburgh. One was like a resource management software and one was a cash flow forecasting software, and they both got started at the same time. So for our website, that's why it's floatapp.com. Yep. So, but no, it is Float.
Yeah, great. So, so cash flow forecasting, scenario planning for the likes of us, accountants, bookkeepers, BAS agents, and as well as business owners to use direct. But obviously we're looking at it in the context of being able to use it for our clients. So over to you, Dylan.
Yes, amazing. Thank you so much, Joe, for the introduction. Joe, would I just be able to get...
I need to let you
do
this.
Yeah.
Sorry.
I'll share my screen
earlier.
and then that's okay. And then I'll share my screen and check my video on and say hi to everyone.
So I've made you the host so you can share your screen and...
Beautiful.
There you go.
Amazing. Perfect. Joe, I'm just going to get you to double check that you can...
Yep. All good.
See that?
And we can
Amazing.
see you.
Beautiful. Hello, everybody, and welcome to a Thursday afternoon. It's sunny here in Sydney, but hopefully the weather's nice wherever you are today. And obviously, as Joe mentioned, cash flow forecasting is definitely the topic for this week's and this month's discussion, I guess. So jumping into a little bit of an introduction about myself, my name's Dylan. I'm the partner relationship manager here at Float. So exactly like Joe mentioned, my job is very much about helping accountants, bookkeepers, BAS agents implement Float into their practice to support their clients with cash flow forecasting. I've been in the industry for a while. I was a former Hub Dog and was one of the founding members of Hub Dog Australia. And I am also the husband of a bookkeeper, so I actually cannot escape even if I wanted to. So,
well, we like that, and that makes you highly qualified to be the husband of a bookkeeper.
Thank you. Yeah, so I do understand. I was going to say I do understand the challenges that you all face, and we're actually getting into a couple of those today, particularly when it comes to cash flow forecasting. Because as I jump onto the next slide, I will probably have a couple of points here that resonate with a lot of people on this call. First of all, we'll get into why cash flow forecasting is so crucial. I don't know that that's necessarily something that's new to anybody, but particularly from a direct perspective, which is the kind of forecasting that Float does. But then get into why this is such a big opportunity. And then one of the key sticking points, which is like clients don't ever want to pay more. So I know that cash flow forecasting is valuable. I know that this is a service they need, but they don't want to pay for it. And we'll get stuck into that because in my role, that's probably the number one thing that I hear. And then obviously I'm from Float. And so we'll talk about how to use Float to provide that service and underpin that cash flow service essentially.
All right, that sounds great. So I'll just interrupt there because I didn't say earlier.
Absolutely.
People, if you would like to ask questions along the way, feel free to throw it in the chat box or Q&A. And I will monitor that, and between Dylan and I will try to get through questions through the presentation, and then there'll be time at the end as well if we need to address anything else at the end or any questions, comments at the end of the presentation.
Yeah, absolutely. Thanks for jumping in with that, Joe. Yeah, really important. Feel free to ask questions and Joe will definitely, as politely as possible, interrupt me and make sure that we can cover those off so that there's no kind of sticking points throughout the presentation and everything's really, really clear. So why is direct cash flow forecasting so crucial? And I guess, first of all, what's direct and what's not direct? So an indirect forecast, which is the other alternative to do a cash flow forecast, is done by deriving a cash balance from the P&L and the balance sheet. So a lot of tools out there do this, but like, you know, the big ones, Spotlight, Fathom, Futurely does this with their accounting product too. So it is really about sort of long-term strategic planning. It's a three-way forecast across all three of the major financial statements. But what it does is it derives the cash position based on those other reports, and will give you a expected cash balance. It doesn't actually give you the operational cash flow necessarily when doing that method. And that's what a direct cash flow forecast does. And that's why it is so crucial, particularly at the moment with so much uncertainty, because those business operations, those questions are coming up around, well, what if I'm not eligible for JobKeeper 2.0, or are we going to be able to reopen? What invoices can we pay? Those are only answered by a direct cash flow forecast, which is done by starting with the bank balance, which is obviously a really good starting point from a cash perspective, adding in any invoices, any bills, but then also any expected payments. And so things like wages, rent, etc. So this is probably what you're doing if you are doing it in a spreadsheet. One that Xero has actually come out with a little bit of a direct cash flow forecasting solution as well. And because everyone understands the need of it, but there's no tool, like the tool that's directly designed for it is Float. But these other tools like Xero are doing it as a bit of an add-on. So what Xero does is it looks at only debtors and only creditors. They are talking about doing something like wages and some other like key elements like that. But it's only 30 days, so it doesn't allow you to sort of see the long-term picture. It doesn't allow your client to know that in 6 months' time or 3 months' time, there's going to be a problem. And similarly, it's not going to capture all the revenue. If they've got direct debit set up, that cash flow forecast isn't going to pick up that crucial payments. And that's why Float has been built from the ground up to provide this for you. And it's solely what we focus on. And that's why we certainly believe, but our customers, if you look at the Xero reviews, demonstrate this, is we are the best in the business at doing this particular type of forecasting. The key thing is uncertainty, and everything going on with COVID right now has really brought to light the crucial element of cash flow forecasting. You're probably doing it for clients and doing some operational planning around COVID at the moment. But the key thing is this is not just about surviving, and shouldn't just be thinking about getting through the uncertainty, because probably a lot of people on this call know that cash is so important and it's so crucial for your business owners to be thinking about, but you can't get them to look at it. And you might be able to at the moment, but then everything's going to go back to COVID normal. They're going to start reopening. They're like, oh, we don't need to worry about cash flow again. So without thinking from such a short-term perspective, why is this such a big opportunity? And why is this such a big opportunity, particularly for the bookkeepers? And I'm going to actually primarily address the bookkeepers on the call for today. And that's because like we really think about advisory and that from a virtual CFO and accountants. We don't necessarily think about it for bookkeepers, and bookkeepers who are doing it. They're like, yeah, I don't want to tread on the toes of the accountant that I work with. But cash flow forecasting and direct cash flow forecasting is so, like, bookkeepers take for granted the fact of how close you are to the business owners. A lot of the time, like my wife, for example, she is essentially running the business for a lot of her clients from the financial perspective. And I know a lot of people on this call probably are as well. And that's cash flow advisory. Like, cash flow advisory is literally just charging clients for the operational questions that they probably come to you with on a monthly or quarterly basis about how much do I charge this new staff member? What should their salary be? Can we afford the new office space? All of those questions are questions that are cash flow advisory questions. And bookkeepers are in the best position to answer those because you are so close to the numbers. As we mentioned, the key drivers of a direct cash flow forecast are the payroll. It's the BAS that's coming up. It's the invoices that are due, the bills that are to pay. That's what you're working with day to day. So you are really in the best position to provide this as a service. The key challenge is that I can't get my clients to pay me more, or I can just use a spreadsheet. So why do I need something like Float? So let's cover those. I can just use a spreadsheet. Absolutely, you definitely can use a spreadsheet to provide a direct cash flow forecast to your clients. The problem with providing it in a spreadsheet is it probably looks something like this, which to everybody on this call looks beautiful. Like, it is amazing. It's a work of art. It's got the best formulas in it. You know what I mean? Everything's linked together using a complex matrix of various inputs because of your understanding of Excel. The problem is you put this in front of the business owner, they're going to glaze over. They did not go in the business to look at numbers. That's why they employed you. And that's not what they want to be doing. And this doesn't help them understand what is driving their business, what's going to happen if Sydney, for example, gets put into a lockdown, or what happens if they take out drawings, because it's just a whole lot of numbers to them. And that's why Float was built with the business owners in mind. Our CEO was a business owner. He ran a digital agency, a marketing agency, and he's a visual guy. He's a creative. He doesn't want to look at numbers, but he knows that in order to have a stable and successful business, he needs to have an accurate cash prediction. And that's why he designed Float. And so rather than having all those numbers, you can easily see here exactly what the ending day bank balance is going to be, what's going to be in the client's bank account at the end of each day, which is what that line is, and when you're going to hit a certain threshold. So you can see there on the 23rd of March, we're going to hit the threshold of $1,000, which is our sort of our tipping point. And we'll get into this in a little bit more detail. So from a business owner's perspective, you're going to get a lot more buy-in if you're providing something that's visual and getting that in front of them than if you're just putting a whole lot of numbers, because that's how you can comprehend the business. It's not necessarily how they're going to be able to comprehend how their business is tracking. Now, the next part that I absolutely love is, but my clients aren't interested in paying me more. Of course they're not. And why aren't they? And it's probably because you're coming up against questions like this right now. Do I need to reduce the number of staff I have to get through COVID or to get through this recent round of lockdowns? When am I going to run out of money? Can I afford to move into this new offer? So like those kind of questions, do we need to shut the office? Do we need to not reopen? All of those are the questions right now about COVID, but not just in COVID times. If we think about normal times, your clients are probably coming into it to you with questions like, can we afford to move into this fancy new office that I found? Zero shows that I'm profitable. Where did all the money go? Those questions require you to take it out, put it into a spreadsheet, crunch some numbers for them. You understand their business so you can quickly do it for them and then provide them the answers. You've just provided cash flow advisory for free. And that's pretty much what 80% of the industry right now is doing. And this is why it's such a big shift that needs to happen, because your clients are not going to want to pay you more if you're providing them cash flow advisory for free. Why would they want to pay for something if they're already getting the value from it? So what I would say is, well, how can you go about that? And how, like, obviously this is so beneficial to the clients and you know that they need it. It's a chicken or the egg theory. You don't want to put in the work without getting paid for it. But like, if they come to you with a question, jump into Float. We'll go through the free trial, but like model that out for them, show them the impact and let them know this is part of an advisory service that I do provide. I've done this for you because I know you need it. But if you have future questions, that's part of my cash flow advisory service, and save that as a library item in Practice Ignition or whatever tool you use for engagements. And when they come to you with those questions, there needs to be a little bit of pushback so that you are charging for the value you're providing, because yes, compliance is important, but advisory and those questions, those operational questions, are what your clients need to be able to continue operating and building sustainable and successful businesses. So that is how to get around. That one is absolutely a shift. It's a shift for the industry. It's also a shift for the clients, but it's a shift that needs to happen if you're going to sort of have a phase shift up, because a lot of with Receipt Bank and HubDoc, like the baseline bookkeeping sort of transactions is gone by the wayside. It now opens you up to provide these higher value services, but you also need to be charging for them and making that a win-win for both you and for the clients.
I'll just jump in there. Yeah, I think that's that's a great point. And I mean, I know a lot of people aren't necessarily offering these services for free, but they're just sort of all bundled in with the general bookkeeping jobs. And yeah, I think it's definitely worth thinking about differentiating that, which you know, then brings you into a whole discussion about your engagement letter, which we won't get into now, but that is also something to think about is, you know, what is your engagement with your clients, and, you know, does it differentiate between all different types of services you offer, and does it enable you to actually charge accordingly for advisory services? Anyway, that's just food for thought. Carry on.
No, I think that's a really great point. But I think I think there's a lot of hype around the whole advisory piece, and the advisory piece is definitely what's used in the industry. But it's like clients, if you said, do you want cash flow advisory to a client? That's not their language. Their language is around, well, I have these operational needs. And so stipulating what cash flow advisory means for their business in those engagements is a crucial part of that service offering, because you need to relate that to the client, not just say, I offer cash flow advisory.
Yeah, exactly. And I think along with that is that, you know, maybe many of us have got engagement letters in place with clients that were written 5, 8, 10 years ago. And so, you know, maybe it's time to rewrite them and reissue them and look at your pricing structure. And with all of this in mind, this sort of cash flow advisory. But so what kind of funky, sexy terminology did you suggest that we use with our clients?
I don't suggest any funky, sexy terminology. What I would suggest doing, and this is actually what I do with a lot of partners, is I say, well, write down every single operational question that the client comes to you with on, like, have like a little bit of a pen zoo or whatever your note taking is, whatever that looks like. And every time a client comes to you with those questions and you've got to quickly whip something up for them to be able to give them an answer, note that down. And so that you can go to them sort of when you catch up, I don't know, at the end of the quarter or whatever that catch up looks like. And so you came to me with all these questions. This isn't part of our current engagement. Why don't we have a talk about these are the questions I answer with my cash flow advisory service. Here's the engagement for that service. Let me know if you're interested in it. And if they're like, no, I don't want to pay anymore. Perfect. But the next time they come to you with those questions, you've now got a leg to stand on and say, well, we caught up about that last week, or whatever the timeline is before they ask you the next question. That's part of the cash flow advisory service that I do provide. We spoke about it. You said you didn't want to it's clearly beneficial for your business. Why don't we sort of bring that up and implement that as part of our engagement so that I can answer questions like this one, as well as the other 6 that you asked me over the last quarter.
Yep, great.
Perfect. So jumping in, so how would you use Float to sort of do a cash flow forecast, and what would it look like actually providing this with the client, I guess? And so jumping into Float here, hopefully that is still sort of showing up okay. This is the Float platform. As I mentioned, what you're seeing here is the expected end of day bank balance on any given day. This is basically built on 3 key fundamentals. It's built on the reconciled balance in Xero. It's built on the invoices due, the bills to pay, and then any forecasts, or in Float we call them budgets, but essentially forecasts or placeholders for what you expect or you know is going to come out or come in over the next little while. And so Float literally gives you the day-by-day breakdown, and you can manage this on an invoice by invoice basis. And this is kind of the level, the granularity, and this is why I'm saying it's so valuable for bookkeepers, because this is what you're doing in a spreadsheet right now. If you are doing something like this, is you're manually going in and entering these invoices, and then having to update, you know what I mean, the expected payment date, for example, in the invoice to see what day that impacts the cash flow. In Float, literally we pull in all the data from Xero. So if you update the plan date in that awaiting payment field in Xero, we will automatically pull that in, update it, and impact the cash flow on that given day. We don't just rely on the due dates, we also use the expected dates. Similarly, if there's something that's contested and you're not sure whether it's going to come in or not, you can easily just toggle that off, for example, and exclude that from the cash flow so that it doesn't overinflate any forecasts without breaking any formulas, which is obviously a really, really good part and something that we all hate when we get an error when we try and delete something out. So that's how it works for invoices, does exactly the same for bills to pay. And then from there, you can go in and edit any forecasts or any budgets that don't capture the invoices due and the bills to pay, because that's obviously a key element of the business, but it's obviously not all of it. There might be work in progress, purchase orders, other sort of income that you know is coming in. And so you can enter those as budgets in Float. And this is one of the key differentiators, is that we allow you to enter these budgets and manipulate these budgets on a super granular level. So what you can see here is I run a donut shop. We've got weekly in-store sales there, as well as I've got monthly delivery revenue from Uber Eats and Deliveroo. And you can add as many of these budgets as you want. So if your clients have like 3 or 4 different revenue streams coming into sales with different timing in terms of payments, you can create a separate budget for each one of those to be able to really get to a forecast that's accurate for that particular client with not a lot of work. Similarly, when it comes to something like payroll, for example, if you're trying to do payroll in a spreadsheet, it probably gets too hard to work out which months have 2 fortnights versus 3. So you just take an average. But in Float, you can literally get down to the day of the pay run. You can see here that this month I'm paying on the 4th and the 18th. But if I go to next month, because of the day of my pay run that's every fortnight, I've actually got 3 fortnights that I have to make sure that I can cover when it comes to wages. And you know what I mean? Most people on this call will be doing payroll. So you have the figures to be able to populate these budgets here. And once they're set, what will happen is they will fill up with actuals to allow you to do budget versus actual analysis to make sure that your budgeting is accurate and adjust as required. So the key thing with Float and the key thing around setup is not to go too granular too quickly, like particularly for a client that's never hasn't really engaged you for the service yet. You don't need to budget out for every single payment or every single piece of money that you're expecting to come in, but just do the top 5 accounts, you know what I mean? Create budgets for your wages, your rent, your BAS, your sales, and that will give you it'll sort of give you 80% with only 20% of the effort, and allow you to have a starting point that you can talk to the client and say, hey, what is this gonna actually look like over the next little while? Now in COVID times, they're going to ask you questions like, well, in Sydney, for example, what if we have a shutdown? What if this shutdown, what if we sort of go the same way as Victoria? And what's that going to mean for my business? Trying to talk them through that's quite challenging, but in Float, it's really, really easy to model. So if we go into, say, a government shutdown, you can create that as a scenario there. And you can see immediately the impact that that's going to have versus your baseline forecast that you just had set up. And you're going to see there that we've got a credit limit, an overdraft of $25,000. We're going to hit that overdraft on the 30th of October. So we're going to be in real trouble on the 30th of October. And all I've done to create that is just gone in. You can see that sales line there. I've just clicked into that sales line and into that sales budget there for the weekly in-store sales. And I've just ignored those budgets. Literally 6 clicks is all it took. And that allows me to see the impact. No formulas are broken, no nothing. I haven't had to copy and paste a whole spreadsheet to model this out. And I'm able to see at a really high level what the impact of a government shutdown is. Now I can copy this. If we're going to go this way, everybody on this call is probably thinking, well, if your revenue goes backwards like that, then you'll be eligible for JobKeeper 2.0, which is definitely going to be the case. So you can copy that scenario without having to redo all that work and do shutdown plus JobKeeper 2.0. So I didn't do anything with the sales. I just duplicated that because Float gives you that ability. And then from there, I just created a budget for the other revenue for JobKeeper 2.0 there for $7,200 a month. And then you can see that even if we had a shutdown, a 6-week shutdown in Sydney, for example, that we're not going to actually hit our credit limit and the business owner will be fine. And you can give them that peace of mind with with using Float, and you can see how quickly and easy it is to do once you've got it set up. And that's why this is such a valuable service right now, because these are the kind of questions that are probably coming up and that your clients are coming to you with. But then the question again, like I referred to earlier, is, well, what about in the future? What about once everything's sitting pretty and we're back to the base, everything's looking rosy, we've got those peaks and troughs, but we're trending up. Why is cash flow service important then? Well, a common one and one that I've come across quite a lot is business owners obviously want to take drawings. They want to pay themselves their wages. They're working really hard. They're managing the business. They want to take out $5,000 a month. And they're like, well, I'm just going to do it. And then they do it. And then it comes up to the next BAS and they don't have enough cash. And you're like, I told you so. And they were like, yeah, well, I've got to pay myself something. You can actually model out what the impact is that they want to have. So in this case, we've set an owner's drawing goal of $5,000 a month. And so all I did, again, to create that scenario was I just created a scenario, came down here to owner's drawings and just created a budget on the last day of each month for $5,000. And then you can really easily see the impact that that's going to have on the business. And you're going to hit your credit limit on the 30th of January next year. And it's going to get worse from there, essentially. So, but then what you can say is, well, if this is your goal, how can we work towards this? And set a key metric that you're going to catch up and talk through at the end of each sort of month or quarter, whatever your timeline is that they can work towards. And you can track it using budgets versus actuals to see if they're hitting that key metric that they've sort of set for themselves to be able to get to a point where they can get to that goal of taking out $5,000 a month and have the business really working for them, as opposed to you just being the bearer of bad news and saying, well, your BAS payments come up, you don't have enough money, because that's when they see their bookkeeper, who's obviously such a crucial part of their business, as a cost center, because they just like, well, you're the one that keeps coming to me with not only your bill, but also the tax bill. If you can help them get to a point where they can take out cash from the business, then that's an amazing, amazing value add for them. And it paints you in a very, very different light as well. And so you can do scenarios from a goal perspective as well. And as well as other operational elements that come up. If they sort of want to move to a new office, you can change the rent budget and show them what the impact of that rent would be. And that's the kind of cash flow service that you want to be providing going forward. The thing is, right now, you've actually got a really good platform to stand on, because everybody's talking about cash flow right now. Clients are obviously super worried right now. You can help them right now by doing something like this, but then have it transition into something that's going to be a value-added service moving forward. So that's the end of my presentation. Really interested to jump into key questions that anyone on the call potentially has, and happy to field those.
I have a question, Dylan, which is how far in the future can you forecast with Float?
Yeah, really good question. So in terms of Float itself, you can forecast out up to 3 years. Now, so you can see here, you can actually have this forecast going out all the way to 2023. Now, the challenge you have with a direct cash flow forecast, or really any forecast when you're like forecasting out that amount of time, is you're going to be like, the further out you go, the less likely it is to be accurate. So like, I would say when you're looking at your forecast, definitely in the next 12 to 18 months is the sweet spot in terms of accuracy. And from there, you can start doing that budget versus actual comparison to see, well, is what you're forecasting actually what's happening in the business, or does it need to be adjusted?
Yeah. And tell us a bit about which software it integrates with.
Yeah, really good question.
Xero,
so at this point in time, Xero is obviously one, and we also integrate with QuickBooks Online. We're still relatively new into Australia. We only started in January 2020 this year. So we don't integrate with MYOB at this point in time. They've obviously got that new cloud product as well that is coming out. So it's a bit of a wait and see. So right at this point in time, Xero and QBO are the only two platforms that we integrate with.
Okay. And is that set up easy? I mean, what's a sort of a realistic time frame that a bookkeeper would need to devote to
actually setting it up.
Yeah, to actually setting it up and getting the integration going.
Yeah, really good question as well. So from a setup perspective, we are going to pull in basically everything within about 2 to 5 minutes in terms of all of the historical actuals, as well as your debtors and your creditors ledger. From there, as I mentioned, the key budgets would be it depends on how many key budgets your business has got. One of our partners one of our silver partners who's actually down in Victoria at the moment, it takes her about half an hour to set float up for each client, and basically just goes through and sets the 5 sort of key ones. So wages, sales, rent, GST, and pay-as-you-go withholding. Sets those 5 budgets up, and that gives her a starting point to start having a conversation with her clients about their cash flow. It's obviously going to take longer though if you do need to bring the reconciliations up to date. So if you are looking at potentially implementing something like Float, any forecasting tool, it's only going to be as good as the data you put into it. So if you have a client that's got a whole lot of stuff out of date, they haven't sent you a whole lot of information, probably not a good one to sort of get started with, because you do want those reconciliations to be up to date, because that reconciled bank balance is going to be the starting point in Float, and it's going to massively impact the setup time, obviously, if you're going through and having to redo all of their sort of last few months worth of bookkeeping first.
Okay, just checking. We don't have anything in the chat box or the Q&A, which possibly means that you've already answered everybody's questions. But yeah.
Okay.
Last call for any questions that anyone has about the product or the direct cash flow method. What about cost? Okay.
Yeah, so thought I'd run through this briefly before everyone sort of signs off. So whenever you're implementing a tool, it was the same at HubDoc, you obviously need to be comfortable using the tool first before recommending it to clients or starting to implement it with clients. So that's why we do provide a free account for all accountants and bookkeepers. So it's just on our website and you can sign up as a partner. That will remain free for life. And then in terms of pricing, we offer a 30-day free trial for clients. And then depending on, we have a mix of single license plans, which are $89 for your first one, and then $59 per month for each client after that. And then, so we give you the option to have like 1 or 2 clients on. And then we also give you the option, if you do want to sort of start rolling this out as a service, we're not going to penalize you for doing that, and do provide bulk license pricing and bulk license discounts as well.
I'll just throw the pricing for bookkeepers link into the chat box there. And then you've got the sign up link on the screen.
Yep. So I just saw that Edward's got a question about, did you set up the base and then modify for each scenario? Really good question. And yes, absolutely. So the base is what you're going to want to set up for the client first. So that's what I mentioned about entering those key budgets. And then once you've got the base and you've got those budgets in, you're able to edit those budgets using the scenario planning tool. So for example, that government shutdown there, I added it as a scenario. So you just add a scenario layer here. For example, we could say lose an employee, or what's probably a better one, I don't know, JobKeeper 2.0 on its own. 2.0, so that'll be roughly about, so then base, start this layer from scratch, create new scenario. So you can see here, everything's turned pink, but it still looks like the base. But then from there, I can go in and add a budget for, in my scenario mode for JobKeeper 2.0. And I'm definitely going to get this wrong. I think it comes in on about the 16th of the month, but it's thereabouts. It's going to go till around March. I know that the payment changes, but just for ease of entry, we'll just chuck it in as 7,200 for 3 different employees. And now you can see that that's in there as a scenario. And then you can see the difference that that's having on your business on any given day. You can see the base versus the scenario. And then you can export all of this obviously as well. And if this does become a reality, you can push that into the base too, so that, you know what I mean, you're not duplicating any work. If you do become eligible for JobKeeper 2.0, you can move that to be a revenue stream as part of your baseline forecast too. A couple of questions on MYOB. If you do use MYOB, can you enter the figures manually in Float? Unfortunately not, because a cash flow forecasting tool, as I mentioned, has got kind of those 3 different components, and around it's kind of complex because you're looking at invoices based on expected date as well. You would have to have like such a detailed export and constantly be exporting from MYOB to see the value in Float. So that's why we don't have a standalone product at this point in time, or a tool that you can just kind of upload basic figures to, just because like Float is a premium product and we don't want to be charging for something where you're not going to get full value from it. In terms of Vicky, your question, any likelihood of connecting with MYOB in the future? There absolutely is. I'm just not the kind of person to oversell and underdeliver. So I'm never going to promise something that I can't absolutely commit to. So I'm not going to say that, yes, we're absolutely going to do it in the future. What I am going to say though, is that MYOB is releasing a fully cloud product sort of towards the tail end of this year. They've made us very well aware of that. We are also based in the UK, where there's a massive Sage user base, similar like there's a massive MYOB user base in Australia. And so if we do decide to go down the route of integrating with Sage, and MYOB's product is as good as sort of it's made out to be, then there's absolutely a real opportunity that we will be integrating with MYOB in the future. But I don't want to promise that because I just don't want to be that guy and then you come back to me in 12 months time saying, where is it? Mirella, who do we contact for setup? You contact me, absolutely. So I probably didn't put my details in there, but if you sign up there using that link as a partner, as I mentioned, you will have a free account. You won't be charged or anything. And either myself or my colleague Drew will definitely be in touch to arrange a setup call and give you all the support you need to get started.
Okay, I think that might be all the questions. Belinda, the pricing link is in the chat box if you want to just copy that and you can have a look at that a bit more later. But Dylan, maybe just say again, did you say the partners get lifetime access for free for their own, but then as soon as you bring a client in, that's when you're charged?
Yeah, exactly. So I'll just bring up the pricing just because there obviously is a couple of questions on pricing. So just so that we've got that up as well. So sorry for everyone, I didn't have this sort of set up straight away. But in terms of our pricing options, as Joe mentioned, we do absolutely have a free account for life for all accountants and bookkeepers. So you can use that for your practice to really get comfortable with the tool. And then from there, if you did just add one client, it's $89 per month, which is just a 10% discount on if they signed up themselves as a direct customer, which is $99 a month. But then as you add 2 or more clients, so whenever we start trialing Float, we always recommend to start with a couple just to really sink your teeth into it and make sure that maybe one client it's not necessarily going to be a fit for. And that's why we recommend starting with 2 or more. And that comes down to $59 per client per month in terms of the subscription. And then from there, we go into the bulk sort of packages. So up to 10 is $289, up to 20 is $479. And then it goes up from there. Obviously, you can have a look at that page sort of at a later point, but that's a bit of a run through of our pricing. But yeah, absolutely, we're not going to charge for your free account.
Great. Okay. Well, I think we've covered all the questions, and anyone who wants to take it further, you can do, I mean, you can do a demo as well, of course, can't you? So if you just want to have a look in your own time and kick it around, you can sign up for the demo as well.
Yeah, absolutely. And one thing I didn't include in this presentation, but I will just include in the chat right now, is just my email. So, you know what I mean? If there's any questions where you sort of, they come to you at a later point and you're like, oh, I didn't ask that. Just feel free to shoot me an email and I'm happy to help. So let me just jump open the chat panel. So this is my direct email, dylan@flowtap.com, nice and simple. So feel free to shoot me an email if there is anything that I can help with from my end, or any questions that you didn't get a chance to ask on the webinar today. Good.
Okay. All right. I think we'll wrap it up. Thank you very much, Dylan, for today. I'm just sorry. I'm just looking at Kathy's message. Dylan, can you just send that again to all panelists and attendees?
Oh, my apologies. Thank you. Someone, Dylan at Flowtap.
And that's my problem as well. I put the link only to panelists.
We're trapped for young players. We both got caught, Joe.
So we'll just put that link there and you'll put your link there. Okay, so people, we'll just give you a minute to copy those links if you want them. Okay. Awesome.